Hello, everyone. Welcome today on this beautiful day. I'm here in Baltimore, Dane Krich with Odyssey Investments, and we have Ishmael there in Austin, Texas,
A
enjoying
cold,
the
cold,
warm,
cold day
warm
here.
sunshine, right?
Yeah, no, it's sunshine, but it is 31 degrees. It feels like 15 degrees here. I got my long underwear on.
Oh, well,
Yeah,
oh,
no,
that's
yeah,
that's
that cold.
different.
Yep.
But anyway, so we're here talking long and short of it podcast, and today I wanted to talk about what the saying I always use. It's not about timing the market, but actual time in the market. And one of the questions that people always ask me when they find out I'm an investment advisor is now a good time to get into the market? And it's always one of those things. It's like there's never a bad time to get into the market. Sure, does the market go through bull markets and bear markets? Sure, it's scary to be in a bear market if you don't know what you're doing when stocks are getting sold off every day and going down, and you're watching principal go down and your account value go down. And but both Ishmael and myself have experienced that. We've lived through a bear market just a couple years ago. I mean, you remember that, Ishmael?
I remember 2022 very
Yep.
well, and more importantly, I remember 2008. And in fact, Dane, I think it's an interesting thing. Like we're old enough to remember the late 90s and the 2000s as well, and that whole decade. And I think it's so interesting and important to talk about time in market versus timing the market. Because think about your psychology, right? The
Yep.
market is going, and I've been through this, and I'm sure you have as well, which is
Yep.
why we believe
Why
what we
we're talking
believe.
about it.
When you see the market going down, it is very difficult for you to pull out your wallet, the extra money you have, and put it in there and see it continue to fall. Like if you had put in money in June 2022, you would have had another 4 months of the S&P going down.
Down, I know.
Would have scared the hell out of you.
Yep.
Although now today you would have, potentially doubled your money if you had
Yep.
just kept it in there. Or September 2008. Could you imagine actually
Yeah.
putting your money in the market in September 2008? But had you, you would be 5x today.
Yep.
Um,
That's it.
and then on the other side, we think about 1999 or 2021, when you're more willing to psychologically just put it in there. And it's easy. You're like, oh, this is great, right? But then you see a fall from there.
Yep.
Whereas just time in market, if you're an investor in 1999 and you're just, like you said, ridden the wave,
Yep.
you'd be so much better off today
You'd be better
versus
off.
timing the market.
Right. I mean, that's the thing. There is no good time or bad time. Could the market, I mean, listen, you and I will wake up. Do you know what the market's going to do tomorrow, Ishmael?
Yeah.
Yeah, me neither. I mean, if I had to venture a guess, the market will go up, it will go down, one or the other.
Right.
So I mean,
Yeah, do
what
you
do
know
you
how
what do you tell people?
an Nvidia stock is going to do tomorrow?
Yeah, I know. It's like, what do you tell people? Yeah, now's a great time. And then, the stock market could go down for the next year.
Yeah.
Okay. But, depending on your time horizon, that's the most important thing. Like, is now a good time to buy? Well, what's your time horizon? How
Hmm.
long do you have? Do you need that money in a year? I would say probably if that's the case, then no, now is not a good time because
Right.
I can't guarantee that the market won't go down. Is now
Exactly.
a good time? Yeah. I mean, if your time horizon is long, yes, now is a good time. Markets get cheap, markets get expensive. That's how it goes. I wish I had a crystal ball. I can tell you I do not, but I obviously know that, and I'm a firm believer when it comes to especially my own portfolio and client portfolios. Client portfolios come first. I'm a firm believer in diversification, because the truth is we have no clue what tomorrow holds. But if
Right.
you if you maintain a diversified portfolio of a good basket of assets, one might go down and one might go out up, and they counterbalance each other. And overall, a good diversified portfolio tends to perform well over a long period of time. I was just looking up and getting ready for this podcast today, and I was thinking about timing the market. Obviously, day traders are one of the ones, they time the market. They try to get in, they try to get out, obviously, and make a really quick buck. And that doesn't work for the most part. And let me just share some of this with you. So 40% of day traders after a month quit. 13% of those of day traders actually remain after 3 years. 13% of day traders are profitable after 6 months, and only 1% of day traders are profitable over 5 years. So, I mean, the 70%, 72% of day traders actually end the year at a loss. Where especially, that can be really concerning. The market's going up and you're a day trader and you're seeing that you've lost money because you're getting in, you're getting out, you're getting in. You're not allowing the market to do what it can do. In that, like when earnings grow and we adjust that for inflation, earnings grow, the market tends to perform well.
Yeah, and I think just I think about various scenarios in the day trade and all of that, and I think you and I have both dabbled in it, and you get
Yep.
lucky at times. I tell
Sure.
people my very first day trade, I literally doubled my money in about 3 hours, and I thought, oh my God, in 2 weeks I'm going to be a millionaire.
Yep.
Needless to say, all that money went away because you can get lucky from time to time, but honestly,
Yep.
the signals and the charts and the techno, I've looked at all of that, right?
Yep.
And it is nonsensical for 99.9% of people. There's a few people who are probably very good at it and great at it, and good for them.
Yep.
But you're, for the average investor, time and market in a diversified portfolio, you are going to do quite well.
Yep.
And that's it. And you just said, like, Dane, I don't know if you've looked at your portfolio. I just checked my portfolio right now. I'm down 1% today, right?
Yep. Yep.
And I didn't even realize the market was down. I'm like, oh my gosh, that's
Yep.
terrible. I should sell everything, right?
Right.
But tomorrow it might bounce back. I remember 2022, again, I think everyone was down like 10 to
Yep.
15% that whole year. That sucked.
Yeah, oh, that's not fun. I mean, listen, I had clients who are like, losing 10, 15%.
Yep,
What do you tell them? Just,
right.
but listen, you calm their nerves. This happens.
Mhm.
Bull markets and bear markets happen,
Yep.
I just did a paper that I put out last week on the average lifespan of any bull market is right around 3.8 years, 4 years. And then it turns bear. And then from a bear market, we turn back in. I mean, historically, we've gone back into a bull market. So, you go through this. And once again, if you can realize that and psychologically prepare yourself for the fact that, your account on any given day could be down. But once again, a well-diversified
Mhm.
portfolio over time tends to perform very well. I mean, that's just what I personally believe in. And I've done the same thing with
It's
Ishmael.
proven out over time as
Yeah.
well
It,
that
it,
it does, right? We are not, like you said, we don't have crystal balls. There's companies we can take a look at and you get lucky or you feel good about it, but overall, diversified portfolio
yep.
over time, and you will do just fine
Yep.
versus trying to get in and out of the market, time it, and play all these games. It doesn't work for the normal
Average
investor.
investor. Yeah, of course, of course. And like you said, we all at some point get lucky, and that
Yeah.
that makes it so that you believe, oh, I'll get lucky the next time. And then the next thing you know, you're not lucky. So what do? You play it again. You're not lucky and before you know it, you've racked up some losses that wouldn't have happened if you would just
Well, you turn
allowed.
into a gambler. And I think I tell people this as well. If you want to invest, you really want to invest for long, delete any app off your phone. Delete Robinhood,
Yep.
we will delete any of those off your phone.
Yep.
Do not look at it. Do not touch it. Do not even dare touch options. None of that. It is fundamentally, it's now, Dane, in my opinion, there's not enough friction and it's too easy to just gamble away. And you
Yep.
see, oh my gosh, I saw Nvidia go up 10% today. Man, I could have made so much money. Well, guess what?
Yeah.
This is why we have a diversified portfolio in the long run,
Right.
because the odds are that would have been in there and you would have seen the benefit of those gains one way or another.
Yeah, exactly. Exactly. Just maintain a long-term diversified portfolio strategy, and I think over time you will do well for yourself and grow your wealth.
Yeah.
It's what do they say? The person who persists and sticks with it over time does well.
Yep. Absolutely.
So,
Absolutely.
well, Ishmael, thank you for
Love it.
joining me. I'm sorry
Yeah.
to hear
Love
that
it.
it's cold
I
there.
appreciate you having me on today, but
Yeah,
long term,
long term. Hey, listen, the next time we talk, our portfolios might be up, our portfolios might be down. I don't
hmm
know, but you know what?
I don't know. All I know is I'll be adding money to it all the
There you
time,
go.
constantly. That's it.
Just stick with that strategy, and we'll talk next time.
All right. Have a good one. Take care,
You
y'all.
too. Thanks, Ishmael.